Your Excellency, welcome back to CNBC. It's great to see you.
Thank you.
Can I begin by getting your initial thoughts on FII so far? What's the tone of the conversation on the ground?
Well, thank you very much, first of all, for having me. And I think you have spoken to a lot of people, and I hope you get a feel of the vibe. A lot of optimists around, despite all the challenges around the world. There is a very good feeling that things are happening in certain spots around the world. But generally, I think the backdrop is a global situation that is actually proving very resilient. And we are nearing the soft landing, and we wanted to make sure that actually we reach that. The last mile is very important. I think inflation is still there, but it is coming down. That is giving people a good feel. Obviously, challenges exist globally, and despite that, investors are looking for spots where they can actually invest, and I would like to think Saudi Arabia is one.
And you're IMFC chair as well, so what would you say is the biggest risk to global economic growth in 2025?
Dan, we came from Washington 2 days ago after a week full of meetings at IMF and the World Bank and the G20. And I think, there is a clear recognition that the world is actually proving to be resilient. And a lot of discussion around steering the soft landing, which is very important. The key challenge is actually sovereign debt. And a lot of discussion throughout last week is to make sure that the two institutions in the G20 work together to try and find a solution to the sovereign debt, particularly in low-income countries. I think the painful fact is low-income countries, a lot of them are now having to pay their debt service that is actually more than their healthcare, education, and climate action combined. That is not good for the world, and we need to make sure that we find a solution to that. Hopefully we will, and we are working collectively globally to reach that solution.
You mentioned we are likely to see a soft landing, and I also want your take on another issue that you and I have spoken about in the past, and it's this really important issue of economic fragmentation. What's the actual status of fragmentation today, and what's being done to address this?
I will give you two answers. I think the straight answer is fragmentation is very serious. It is actually crippling the world economy, but I am not sure actually that is the reality. I mean, that is the perception, which is very important. Sometimes perception is stronger than reality and could actually bring reality. Reality is, it's not as bad. Global trade is actually growing. And countries are actually exchanging goods and services. FDI is flowing. The challenge, I think, is certain countries are turning into themselves for a lot of reasons, becoming more nationalist, becoming more protectionist. If that grows, yes, there will be more serious problems. Hopefully, they will see the long-term, the mid-term and long-term benefits of actually continuing with globalization, continuing supporting multilateral initiatives, because we face very serious challenges that no one country can solve alone. So you need really to collaborate. I'm optimist. I mean, the last week we announced at the IMF that we reached consensus on a very major, serious issue. The surcharges, the charges that will help actually low-income countries and emerging economies in their debt. That was agreed unanimously by the 190 members of the IMF. That is a show of real solidarity around key issues facing the world.
I wanted to ask you about the backdrop of regional conflict we also find ourselves in now. I think it's fair to say that Israel's war has been quite damaging to investor confidence. So what is Saudi Arabia doing to essentially shield itself from the economic risks associated with the continuing conflict that we see in the region today?
I think it is important really to look at this quite at a macro level. What would investors want from the country they invest in? I think they need to see that there is actually a serious fiscal discipline and sustainable path. They need to see long-term plans. They need to see serious commitment to execution. They need to see a very clear communication of these long-term plans so that they are predictable, they can plan for the long term, and they need to see a reasonable risk-adjusted returns for their investments. What we have done through Saudi Vision 2030 is actually providing that. Long-term plans, a very serious commitment to execution, delivery under these executions. Yesterday, one key investor told me, I am not here for the Vision 2030 promises, I'm here because of the deliveries that it's making. I think it is that is attracting investors to Saudi Arabia and to other spots that are right in the middle of quite a difficult geopolitical tensions across the globe.
To what extent do you also attribute Saudi Arabia's foreign policy objectives to? Do you think the recent rapprochement with Iran has also helped to shield Saudi Arabia economically?
I think one key element that you need for a sustainable economic diversification plan and economic growth is actually having stability. Investments does not like instability. And Saudi Arabia has actually been an anchor of stability in the region and globally. We have worked with allies, colleagues, friends, and partners around the world to bring more stability and to de-escalate in the region and outside the region. De-escalating with Iran and re-establishing a relationship is one, but we have done so many other initiatives to make sure that the region stability is maintained.
Can I ask you about another critical event coming up next week as well? It's the US presidential election. How concerned are you by the potential foreign policy impact of the vote, not only on the MENA region, but also on Saudi Arabia specifically?
I think US election is for the US citizens, and they will elect who they think is right for America, and I am confident that they will. For Saudi, from a Saudi perspective, we have actually managed very well to work with both sides of the aisle when they are in the White House, very constructively, and I think there is a lot of value that we bring to the table, and we look forward to working even more with whoever comes to the White House next year. So I am not really concerned about that. I think our concern is to work with institutions, to make sure that we continue adding value to our nation, to our people, but also to the world, including the US.
So it's not necessarily the case that one candidate or the other would be better for the region, for Saudi Arabia?
I think one candidate or the other will be better for America, and the world will need to work with whoever's in the White House. Saudi is no exception.
Let's talk about the overall economic impact as well, because when the US election happens, just 2 days later, we're also going to see the Federal Reserve make its rates decision. Now, of course, Saudi Arabia moves in lockstep with the Fed because of the currency peg. So walk me through your own expectations on what lower rates are going to mean for the Saudi economy moving forward. And not just lower rates, but also lower oil, with oil tracking at around 70 USD now.
First of all, I think a lot of people would speculate and will wait for the Fed to decide. I was last week in Washington, and Chair Jay Powell was there, and I understand their thinking, and I appreciate really the process they go through. Generally, the likelihood of trend is for interest rate to go down. I think that is helpful for the world economy in addition to the US economy. that will actually help growth. We need to make sure that the global, at large, global trajectory towards growth goes to the upside, and lower interest rate actually helps. From a Saudi perspective, I think that will definitely help us. We're going through significant reform that requires a lot of funding, and the cheaper the funding, the better for us.
You and I have spoken before about the kingdom's ongoing and aggressive diversification efforts, but at the same time as well, we are seeing oil prices below the IMF fiscal break-even. So what does that mean for the budget, and how important is fiscal discipline in this environment?
This is actually a very good question, Dan, and I think it just summarizes possibly what Vision 2030 is about. Vision 2030 is about decoupling the Saudi economy from the fluctuation of oil. And we came a long way over the last 7 years, long way when we started. Today, our non-oil GDP is 52% of the total GDP. That is significant diversification. Our non-oil revenues have grown significantly. Now it covers about 37% of our expenditure. That is significant diversification, and that gives you a lot of comfort that you can maneuver and be stable despite the fluctuation in oil price. Our aim is to make sure that our plans are stable and predictable despite the fluctuation in the commodity price. That is going to continue. We are not going to blink. We have significant fiscal resource under our disposal, and we are very disciplined in our fiscal position. I mean, if you look at what we have done over the last 6 years, it's actually remarkable, bringing deficit down from 13% to zero, and now spending even more to support our diversification plan, our strategies, even with a deficit of 2%, is remarkable.
So is the trajectory of Saudi spending sustainable today?
Absolutely yes. Absolutely yes. And we have published actually recently our next 3 years numbers, and we think it is very sustainable.
Just before I let you go, what's the biggest risk you're watching in 2025?
I think globally, the serious issue that we need to watch is sovereign debt issues, particularly in low-income countries and emerging economies that does not have the fiscal buffers to lean into in case of disruptions in the market. And hopefully between the IMF and the G20, we will find a solution, and we will be ready to support the world economy in cases of shocks in that area. But it is an area that we need to watch as the global leaders to make sure that it doesn't surprise us.